Trading the financial market is a highly lucrative career, but so are the risks involved. Too many traders want to make the big bag, buy the Lambo, and be financially free. Is this possible? Yes, but only after proper education. Welcome to class. Alright, welcome to the Market Structure Guide Batch 2. This will be a continuation of our previous class, and we'll be looking at the break and retest strategy today. The break and retest is another way to explain the shift in market structure, because the shift in market structure is just the same thing as break and retest, just that it becomes very important and valid when there is a shift in market structure. Now, this is a movement of candles. As you already know, this is how the candle moves from a low to a high in the case of an uptrend. And when the market creates a bearish candle in between and it moves up like this kind of chart can be represented like this. You understand me? So this is another way to represent this same chart that you are seeing here. Now let's look at another one. This is another move from a low to a high, and in between there are two red candles in between. Now this same move can be represented as this. Now this is also what you know as break and retest strategy. Okay, now this is how the market moves. Let's explain further. Let me use this other side at the right hand side to explain to you. When the market creates a bearish candle like this in between, note that the market will move up and it will come back down again to that red candle. That is something you should take note of. The market, if it leaves a red candle in an upward move, it returns back to that same red candle. That is how price move. I explained this to you before in our previous lecture, just that I explained it not using red candles in between. I explained it using the wicks. I told you that the wicks must touch. That is, the wick of the third candle at the bottom must touch the high, the wick which is the high of the first candle. So I explained that last week, but then this is another way to explain it, that when there is a red candle like this and the market keeps going up, the market will return back to close that red candle before it goes up again. So this is the same thing I'm saying here, that when the market starts moving from a low to a high and it moves like this, it must come back to that same, it must come back to the previous high, all right, before it continues to go up. That is how you know that the market is properly balanced, okay, that it is balanced. That's how you do it. But the case here market is not balanced, we are now going to exploit the market imbalances so that we use them to trade. You understand me? So let's look at bullish, reversal, break and retest. Now this strategy I'll be showing to you today is a bullish, this is a reversal strategy, okay? So now let's assume that the market has been coming down, as in this case, and then after it goes to this low, it moved up just as it was doing in the form of the downtrend. You know, the downtrend creates a structure of lower highs and lower lows, right? But then the market got to this low here, and then it creates an equal low. That's not the most important thing. The most important thing is that after the market created that equal low, it broke the structure that it was forming. That means the structure of the downtrend, it broke it upwards. I told you last week that here is the shift in market structure, right? Please, if you don't understand what I'm saying now, refer back to the video we uploaded before this one so that you can understand what I'm talking about. So once the market breaks this high in this manner, it has changed the structure. It's no longer a lower high, but rather a higher high. You understand me? So now the expectation is that the market will return back to this same high to balance the price movement before going upwards. Now there are reasons why this happened, but this is not, I'm not going to mention any of that in this video. Do you understand me? So if you keep following me, one day you will hear me mention it. I said maybe you come for private mentorship, but the thing is, there are reasons why the market must come back to this high. It's because of the way the orders are placed, right? But there's no really enough time to explain to you here. Okay, so but it's because of the way the orders are placed. So now the market will come back to this high before it continues to go. Why? Every market must buy at a discount. All right, every market buys at a discount. That means market buys at a low price. That is why it has to come back down so that it can feel it and continue to go up. What I just said now need further explanations and concrete instances, live instances to explain. But let's move onward. Okay, so now we have a second representation of this same thing. But the difference between this and this is that the low here, the low of this candle here is higher than the low of this. Okay, so this is the second scenario. But the most important thing to look at here is a shift in market structure. So this is where you enter the trade. All right, so there's a third one, which is this. Okay, in this third scenario, the low of this price is lower than this low. All right, just as in the downtrend as it has been coming down. But all of a sudden, or as price was moving, it came back up and it broke this previous high. This is the last higher lower high. So this is the last lower high, like I told you guys before in the other video, so that the market will have to break. The moment the market breaks the last lower high, then you know that it's a return back to it and it will buy. Okay, so this is for the case of bullish reversal. Now reversal, why? Because market was going down before this happened, so you will buy it. So it's a bullish reversal. Okay, everything I've said so far is only valid at a bottom or when a sell side liquidity has been grabbed. Okay, so the explanation of this will come as we keep progressing. All right, so let's go to the bearish reversal, break and retest. So this is the first example of it. Just as in the other one, it's just reverse of the case. All right, so the market will have been going up, creating higher highs and higher lows, as in the case of an uptrend. And then when it got here, the market dropped below the previous low, creating a low that is lower than this. So in that case, this one becomes a last higher low. All right, so once the market returns to it, the expectation is that it will sell. But take note that all of this is happening at a top. I will also explain further on the chart. So these are other possible scenarios where how you can get it. This is a high that is lower than the previous one, and for this one is a high that is higher than the previous one. So in all of these three scenarios, the movement is the same. Do you understand me? So I just drew this scenario so that you understand that it is not just one thing. There are many other variations of this thing. There can be triple tops, there can be 4 tops, all right, before the shift in market structure occur. But however it happens, you should know that the shift in market structure is a very, very important break and retest strategy, a reversal break and retest strategy. Okay, I will also show it to you on a continuation strategy, but you must know that this is only valid at the top or when a buy side liquidity has been grabbed. You understand what I just said? So this is only valid at the top or when a buy side liquidity has been grabbed. All right, let's go to the continuation break and retest. All right, so in this scenario, the market would have been going up as in an uptrend, and then it started creating these structures. This is the first shift market structure, and that market continued going up. Then as the market keeps going up like this, at the break of the second high, all right, you wait for the retest. So this here becomes your entry. So the break and retest that we have been talking about can be used for a continuation trading, like in terms of you continuing a trend. You can use it to continue a trend. So here you're going to put your entry and stop loss. They are always obvious. I'm going to still show that to you on a live chart. So but this is only valid if there is a fair value gap or an imbalance at the top. That means you have spotted from the previous price action that there is a fair value gap the market needs to close, or that there's an imbalance in price that the market needs to close at the top. So the market is rallying back to that imbalance or fair value gap. That is the only time you begin to use this strategy. You don't use this strategy at the top. You use it, when the trend is beginning and it's going to a top, it's going to an imbalance at the top or going to a fair value gap at the top. That's when you use it to continue. All right. So the next will be for the bearish continuation. break and retest. All right, so we'll be looking at just the opposite of what we've seen before. The market would have been going down, just as in the case of a downtrend, and after it breaks this low, it turns back to it and it broke a second one. This second one becomes your entry. All right, here becomes your entry, because this is just a continuation kind of a strategy, right? But it's also the break and retest, it's also the shift in market structure. And then this is only valid if there is fair value gap or imbalance at the bottom. All right, okay, so this is the way the strategy is. Okay, all right, so let's look at it on the live chart. All right, guys, so this is the chart of the volatility 75 1S index, and this also happened in all other assets that you will see on any broker, on any chart at all you open. The price moves the same way. So the market moves from a high to a low, all right, and then continues like this in this manner. So we are looking at a downtrend in this case. All right, so we're looking at a downtrend, and then when the market got here, we took a move that was kind of equal to this other high. All right, so there is no shift in market structure yet. All right, so then it created a low like this. This low is higher than this, so that tells me the market is about to move up. Then it moved up like this. The moment the market moves to the top like this, there is a shift in market structure already. This is not a perfect shift in market structure, but this is another variation of the shift in market structure. All right, so some persons could have actually just drew it in a different way. Let me draw it for you now. Some persons could have actually just, let me start from here, like this. All right, to this level, to this, to this, to this, and some persons will just draw this as a straight move. All right, it's a straight move. It's the same. I only stopped here because it's also a high. All right, but the minute the market broke this high here becomes the shift in market structure. So the expectation is that the market will return back like it has done so. All right, so here becomes the entry for you to trade a buy. Here becomes the entry for you to trade a buy. You understand? So this is the shift in market structure I'll be talking about. The market shifted from the structure of a downtrend and then it moved up. All right, so if you are looking at it this way, it's valid. Then if you are also looking at it the way I drew it initially, that is from here to this level, and then to this level, then to this level, then move down, then like this, here will still be your entry. You understand me? Here will still be your entry. So that becomes the place where you enter a buy. You understand me? Because this is the last lower high that was broken. All right, so before the market continued to move up. Okay, so now let me also explain the continuation strategy with this as well. This is the first break and the market returned back to it and the market bought from here upwards. All right, so let me remove this. Now after the market broke this level, and it got here and returned back, here is the entry for the bullish shift in market structure. Right, then the market decided to move up again. After that's the expectation for it to move up. Now that it has moved up, started coming back down and it got back here. What did you observe? The market just returned back to this second high. Are you seeing that? To this second high. So here becomes your second entry. This is in the case where you use it as a continuation strategy. Do you understand what I mean? This is the case where you use it as a continuation strategy. Now, something that I must show to you is this. In this type of scenario, your stop loss is going to go like this. It's going to go below the whole of these red candles here are going to be your stop loss. Let me remove this. Let me remove this line. All right, so the whole of these red candles here would be your zone. So you enter here and your stop loss will be here, and then you target a move up 1:2, 1:3. You understand what I just said? That's your risk to your reward. Now, you value, or you allowed, or you accepted, or you believe that this market was going to buy because of previous price action at the top here. This is what we call liquidity. So this is our liquidity at the top. The market is going to grab it because this is equal high at the top, and this is our liquidity level. I did mean there was also a fair value gap or an imbalance at the top. Then that will also be a reason why you believe the market will continue to go up even after dropping like this. All right. So this is all I have been showing to you on the presentation slide. Okay. Now let's continue. So the markets have started moving from here to this level, and it came down for the first entry, and then we bought this. All right. So then it came back again for the second entry, and then we bought this. All right. So let me clean this. I want to show you something I just saw. All right. So the market moved from here to this level, came back here, and then started moving like this. Okay. Then it broke this high again to this level. All right. But it returned back to it immediately. So the market kept going, and it returned back to this level. Now, which level is this? This level is this other high that has been broken before. You understand what I'm saying? So when the market breaks a high, you expect it to return back to the high before buying. Do you understand me? So that is how you trade the break and retest. But the break and retest is because you have already spotted a shift in market structure at the bottom here, and also a fair value gap or an imbalance or liquidity at the top that the market is going back to reclaim. Do you understand what I just said? So this is how you trade a strategy, whether it is in an uptrend or whether it is in a downtrend. Okay, so because for a downtrend, reverse would be the case. I don't want to make this video so long, so let me clear all of this now. Now the market have reached a top, and then after it got there, it dropped from the top to this level. It has not broken this high. I think when you enter the buy here, you will be wrong because the market have reached a top. It has taken liquidity. There is no longer other price action at the top is going to reclaim. All right. So the market went up here a bit and dropped down again, and it went up and dropped down, and it went up and dropped down like this. I want to show how this look like to you on a lower time frame. All right. Now this is the 1 hour time frame. The same chart I just drew. Okay. So what did you observe? The market, after it started dropping from this high to this level, started creating the same structure I just told you, that whenever the market breaks a low, it comes back to it. Okay, so the market broke that low, this low, and then it returned back into it. Then it started going down again. It broke the second low, and then returned back to it. All right, then it broke this one too, return back to it, but it's not that obvious for your eyes to see because you are still learning how to use this strategy. Okay, but there are a lot of entries in this place. So if you didn't catch this first entry for a sell, then this second one, you should not miss this type of entry because it will be a continuation entry. All right, why? Because you know that the market is going down to fill all of these imbalances that are here. Look at imbalance. This is a lot of imbalance. In the whole of this place, there is no red candle at all. This is an imbalance. Do you understand? Then between this and this, there is a fair value gap here. So the market was going to come down to take out all of this fair value gap and imbalance that is here. So that's why you knew that you should continue to find a place to join the sell. And the only way you join it is to allow it break and retest a level that it broke. That's how you use the strategy to trade. What I just shown to you now, it's a strategy that will never change. It has been there before I was born. It will continue to be there, and this is what I used to trade. So I want to say to you that the shift in market structure or the break and retest, they are intertwined, and you must know what is fair value gap or imbalance in order for you to use them to trade properly. So I've taught about fair value gap and imbalance before in this channel. Just keep watching videos here. You will get an idea of everything you need to do as a trader. This I've been saying does not require any kind of indicator. Okay, it works on any price chart. You must know the different variations, the ones that have equal lows or lows that are higher or lower. Okay, then the same thing for the opposite, which is the downtrend. So, and then also you must know the ones that are for the continuation. This comes when you continually practice. This comes when you continually watch the videos and you keep testing it out. It works. Every time the market breaks a high, it returns back to it. And you mark the whole of the opposite candles as your entry and stop loss. All right, so that you can get the right, you can stay on the trade for long. For example, as the market broke this level down, the whole of this blue green candle before the break, all of them becomes a zone. Okay, so you enter here and you put a stop loss here above. If you miss this first one, the second one, the whole of this green candles here becomes your entry and stop loss. So you enter here at this level and your stop loss goes above here, above it. Okay, so that is how you use it to continue to trade. You understand what I just said? All right, let me show you something I'm expecting on this particular asset now. I want to go back to the 4-hour time frame. All right, this is the 4-hour time frame of this same asset. Now the market have been dropping and then it dropped back to this level. So this is a level very important. The market has returned back to. I returned back to a very important level. Okay, so there are two things in my mind. The two things are, it might continue to drop to this one. Okay, why? Because of the imbalance that I see. I don't know whether you can see the imbalance, but let me zoom so you can see it. The whole of this is fair value gap. On a lower time frame, it will be an imbalance. Okay, now there was another one here that the market has come to fill. This is a fair value gap. Okay, all right, so the market has come to fill it and it has entered the whole of the imbalance perfectly. Okay, so now I'm expecting two things. Either the market will continue to go down because of all these imbalances that are here, or I will see a structure in the 1 hour at this zone. So let me go to the 1 hour now and show you what I'm expecting for me to buy. All right, so for me to buy, I'm expecting that this market is going to move from here to this block and come like this. Then I will buy like this. Let me explain it. I expect that the market will break this high. This is the shift in market structure. So I'm expecting, I'm not going to enter any trade now. I'm still expecting, I'm still hopeful that the market is going to shift upward like this. When it shifts up like this, here becomes my entry, here becomes my stop loss at the bottom here, then I buy from here. That's what I'm expecting. I'm expecting the market to break this. Why? Because of this zone that I showed to you on the 4 hour. This high that is here. Okay, so if the market is going to buy from there, why am I waiting for that shift in market structure? Because there's an imbalance here, a lot of imbalances here, and I don't know if the market will break it and continue to go down. So I will have to wait for that shift in market structure to happen here. And if that shift in market structure happens here, I am very convinced that the market will continue to buy and buy upwards. You understand? So that is how you trade. That's how I trade. All right. So what I just showed to you now is highly secret. It's my strategy so that I used to trade, and you must understand that this is a valuable lesson. Please, if you like this video, what I've done so far, give it a thumbs up, subscribe if you have not subscribed, share this with anyone that you know should learn. Okay, and until we meet again, happy trading. See you in our next meeting.